Hello, this is Connie from MortgageUnderwriters.com, and today I want to talk about USDA direct loan rural housing eligibility requirements. Many people are not aware of the government subsidized USDA direct mortgage for people with low to very low incomes. Many qualifying buyers actually are on fixed income and food stamps. This mortgage does not require a down payment. Some of the eligibility requirements are income, credit history, debt to income ratio, and the home's eligibility. The two major income issues are annual income and repayment income. Now, your annual income includes all household income. That means every single person living in that household, if they have an income, it's all put together in one pot, and that's called annual income. Now, in order to qualify for this loan, the annual income must fall in one of two brackets: low income, which is 50 to 80% of the median income for that county, or very low income, which is less than 50% of the median income for that county. If you qualify there, then we go on to the next step, which is repayment income. And I want you to know that repayment income is only that of the borrowers. And it's the repayment income that is used to calculate the debt to income ratios. Now, the types of income that are allowed, basically all types: Social Security, disability, used to be food stamps, but they just recently changed that. Obviously employment, self-employed, but you have to keep in mind this income must be stable and it must be verifiable. Now, as far as credit history goes, they don't really consider credit scores, but they do look at whether your credit score is above or below 640. If your credit score is above 640, then they have the options not to look at some negative issues. It just depends on your entire portfolio. Now, if it's below, then they have to look very, very closely at everything. And one of the issues are collections. Collections must be paid in full or in a payment plan for a period of 6 months. What that means is if you paid off your collections today, you should wait 6 months before you apply for this loan. Judgments are quite similar, except they require 12 months, so they need to be paid in full for a period of 12 months or in a payment plan for 12 months. Now, if you put these things in a payment plan, make sure you keep documentation, because you are going to have to prove that they have been paid on time. Tax liens must be paid, and if you have any federal judgments that have gone through a federal court, you absolutely will not qualify for this mortgage, and there are no waivers. Now, a lot of people don't have any credit at all. That's okay for this mortgage because they do allow alternative credit. Alternative credit can be things such as your utility bill, your Cablevision, your automobile insurance, that type of thing. Keep in mind, it does have to be documented, so you should save your statements on all of this, or save your check stubs, whatever. You're going to have to be able to prove it. Now, the debt to income ratio, we're looking at two ratios here. The first is your housing ratio. That includes your new mortgage payment. It includes the escrows for the taxes and your homeowner's insurance. And this loan does require escrows. So that total amount cannot equal more than 29% of your repayment income. And they look at your total debt, which includes your housing ratio. And your total debt cannot exceed 41%. Now, sometimes there are compensating factors, and compensating factors are people that have very, very high credit scores, or people who have very, very stable jobs. Say they've been in their job for 15 years. These are really strong issues in their credit file. So if people have compensating factors, it is possible that the underwriter will submit a waiver for this stuff, but please understand, it is definitely at the underwriter's discretion, and you cannot count on it. The homes also have to be eligible. Number one, they have to be in a rural area, and in each county there is a maximum loan allowed, and that's based on what they call modest housing, which basically boils down to the median appraised value of the homes in that county. The condition has to be adequate, and condition, they're talking about health and safety issues, although it can't be, a home that needs a lot of repairs, because basically people on very low income can't afford those things. Another thing, they cannot have a swimming pool. They feel that if it has a swimming pool, then it's not modest housing. If you're interested in learning more about the guidelines, you can go to the USDA website at usdaruraldev.usda.gov. But please keep in mind, this is not user-friendly. It's a government website. Or you can visit USDA Rural Development DirectMortgage.com. If you go to our website, we will be happy to help you find the answers you are looking for. I recommend that you go to our website and take a look at some of the other qualifying factors. Now's the time. The interest rates will never get lower than this.